Hello friends, welcome back. So in this video, today we are going to talk about one interesting strategy through which you will be able to learn a simple way of investing in the stock market, through which you will be able to make your wealth or create your wealth with a consistent CAGR of more than 20 to 25%. So whenever we talk about stock market, we tend to think that we need the subject knowledge of accounting, finance. We should know the business model, fundamentals of business, and all these different parameters. And that is why, because of these skill set requirement, people usually tends to delay their investment journey in the stock market. In this video, we are going to learn a simplest strategy to invest in the stock market. So basically today we are not going to talk about trading, but we are going to talk about the investment. So let's get started. So let me share my screen and let's discuss what this strategy is all about. So recently I have written a blog also on this topic, which I have posted in my website. So you can check that also. I will share the link in the description box. But I will also show you how you can check on my website. So if you go, if you type WHIRLPOOL in Google, it will take you through the website WHIRLPOOL.com. So you can click on this, and this is the home page of our website. And you have to go on this tag, you have to click on it, and you have to go to my blog. And in my blog, on 4th of January, I have posted this blog. You can read it out to understand what this strategy is all about in detail. But anyway, we are going to discuss in this video. So now let's first understand, before jumping into the steps to follow to understand this strategy, what are the fundamental requirements of this strategy. So all our strategy which we talk about on this channel, these strategies are built around the combination of fundamental analysis, financial analysis, and the technical analysis. I have recently posted one video also. I will share the link in the I button. You can check. What are the common mistakes usually the retail traders do in the stock market? So let's start our discussion. So this is a strategy of 200-day moving average. So first, the most critical steps to start this strategy or to build this strategy is we need to identify the fundamental great companies. So how to identify those fundamental great companies, that also practically we will see in the screener. So first, few of the parameters which we need to check to identify these fundamental great companies are: companies should be in the business from last 15-20 years. Why it is so? Because those companies which are already in the market and who are running consistently, growing their revenue and profit over the year, they know their business, and this is one of the most critical parameter we need to check to identify fundamental great company. The second parameter should be the company should be market leader or among the market leader with brand. And the last two parameters which will be linked with the financials of the company, that is we need to check the ROCE, return on capital employed, must be greater than 30%, and there should be no debt on the company or marginal debt which will be less than 10%. So these are few of the parameters you can check and identify and make the set of the company where you will be implementing this strategy to build the consistent wealth with a CAGR of more than 20 to 25%. I will also share the 30 to 35 companies list in the description box, which we have identified from these parameters only. So that also you can use directly if you don't want to make a separate list out of these parameters. Now, what is the second step? So first step, we already identify the fundamental great companies. Now the second steps, we need to use the indicator, that is 200-day moving average indicator, to identify or to make our position in the particular stocks. So whenever the stock price is trading below the 200-day moving average, we are going to make our position. That means we are going to buy that stocks. So that is the second steps. All these steps we are going to see practically in our trade view on the different chart pattern. No need to worry. So first we will be just discussing what are the steps here. So first steps, again I am repeating, identifying the fundamental grade company. Second, whenever the stock price of that particular stock is trading below 200-day moving average, we are going to buy that stocks. The third step, we have to do, this is one of the most critical step, because the third step tells us that we have to invest consistently with every opportunity over the years to build our wealth, because we are talking about investment here, not the trading. That's why this strategy is all about building the wealth or building the future fortune. So that is why whenever the opportunity will be there in that particular stocks or different stocks, every month you have to set aside some amount of money for that, for investment, and you have to keep investing as far as the opportunity is concerned, or whenever the opportunity is available. That is very, very critical. Now, in case you want to sell some share also, okay, so only sell when the stock is trading at its all-time high level. All-time high level means it should be trading at the all-time high price level over the period of time. That is again very critical. And we are talking about again the investment. So you have to think about the investment for a period of 5, 10, 15 or 20 years maybe, to see the compounding effects in that particular stock investment. And you can link it with your financial goals also. So these are the fundamental 4 steps. Let me just recap for you. So the first step is we have to identify the fundamental grade companies. I have already listed down for you. I will share in the description box. The second step is whenever the stock is trading below the 200-day moving average, we have to buy that stock and we have to keep invested in that particular stock. And with every opportunity, we have to consistently invest in that stock. So these are the fundamental steps for 200-day moving average strategy. Now let's go to screener and see how to identify these lists or how to make these great fundamental companies. So when you come to screener, you have to go to screens. You have to first log in with your, of course, whatever the Gmail account or other accounts you are having. Then you have to go to screen, and then you can see here one tab that tells you that create new screen. So you have to click on this. It will pop up this window, and here you need to put the query which you want to check. So in our steps of identifying the fundamental companies, we have two queries, that is ROC 30% and debt to equity should be marginal, means less than 10%. So first let me write it down. So return on capital employed. So you can see return on capital employed, you can click on it, it will come. Now greater than 30%. So if you see on the right hand side, it will also give you the formula to understand what this return on capital employed is. And in the below you can see it is written as value in percentage. So you no need to use write percentage again after the integer value. You just have to put 30 because it understands that whatever the value you have put, it is in percentage term. Now you have to write AND because we are using two queries here. So the second one is debt to equity ratio, that is debt to equity ratio should be less than 0.10. 0.10 means it should be less than 10%. Now we have written our both the parameters. You have to run this query. So after running, you have got the list of 135 companies. Now you no need to select all the 135 companies. We need to select only top 25, 30 or 35 companies to make our list. and we should implement this 200-day moving average over those stocks only. So when you click on this market capitalization tab, it will sort out the companies from the higher market capitalization value. One exception here, you no need to take the PSU company to make this fundamental grade companies list. So let's see which companies has came as per our query. So TCS we are going to take, Infosys we are going to take, HILDUNILVR we are going to take, Nestle, yes, DV's, L&T, Coal India, no, MARICO, yes, PNG, yes, HDFC, AMC, yes, then Colgate, yes. So see, from top 20, 25 or 30 companies, you can make a separate list for your implementing this 200-day moving average strategy. So this is how you can identify the great fundamental companies. Now, when you are implementing this ROC and debt to equity ratio, you have to understand that it will not include the banking or the financial sector stock in it, because their business model is totally different from according to our parameters which we have put it in the query. Because banking sector and NBFC sectors, their business is to take loan and give loan to the consumer and earn the revenue out of it. So definitely their debt to equity ratio is not going to be 10%, but it is far more than that. So there is a separate parameter you need to check for in case of banking sector or NBFC sector. But I have already identified the market leaders from the banking sector and financing sector and made the list for you that I will share in the description box again. So now let's go to trade view to see our technical analysis, how we are going to implement this and make our position in these stocks. So I have identified one stocks from different sectors, like from IT sector I have listed out here TCS. From chemical adhesive sector we have listed out Pidilite. From paint sector ASIANPAINT. Banking sector HDFCBANK, HILDUNILVR. From FMCG, from finance sector BAJAJFINSV and Havells. So let's take few of the example to understand what this strategy is all about. So what you have to do, let me just first put how to put this 200-day moving average indicator. So you have to come to trade view, you have to make your watch list, and then you have to come here indicators and you have to type moving average. Once you will type moving average and you will click on it, it will apply behind on the chart or candlestick. Now you can see moving average 9 close, this price is showing. So currently we have to change the input because it has by default has taken the 9-day moving average chart. So we have to change this input. We have to click on the settings. Again, let me show you. You have to just click on the setting. It will pop up this window and you have to go to input, and in the length you have, instead of 9, you have to put 200 because we are talking about 200-day moving average. Now you can see the blue curve here. Let's change the color so that it will be visible. Let me make it white. Okay. So we have implemented our indicator, that is 200-day moving average. Now let's take the last 10 years data to see with this strategy how our investment has become as on date. Now, so we are going to take from 2012 to 2022 January. So see, whenever the price, whatever second step tells us that whenever the price comes below the 200-day moving average, we have to purchase that stock. So 200-day moving average curve, and you can see we are going to make our buy here. First buy here because it has come down below 200-day moving average. Second, it has came down here. The price was trading below during April 2012. Now third investment will be here. So whenever the price will be below 200-day moving average, we are going to make our purchase, or we are going to invest in that particular stock. So the next one is here, let me just put it this green button wherever we are making the position. So here you can see there is a range where the price is trading below the 200. So you can make multiple investment also during this period. So it depends what is the volatility in the market and market sentiments. So the next investment will be here. Next will be here. So I'm just putting it whenever the prices is trading below 200-day moving average. Okay, then at last we will see how much gain we have made during these 10 years of investment. Next is here. This is again the complete range of investment. Due to pandemic, it has came down and corrected so much, and currently it is trading at far above the 200-day moving average. So see how much investment we have done over the period of 10 years. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15. So multiple investment we have done over the period of 10 years. Now see, if you have invested in this with this strategy, just see how much we have made. So the percentage gain we got is 626%, means almost 7 times our money had multiplied over the period of this 10 years. In my blog also, I have shared a small case study on ASIANPAINT where I have shown the 5-year investment with 11 different installment of investment. You can check. See, there are 11 investment at different price level whenever the price has gone below the 200-day moving average. So total investment you have done is 1,30,000, and net value as on 3rd June 2022 for 110 stocks with the current price of 3,432, the value comes as 3,77,000. So the net profit you made is 2,46,000 with a CAGR of 35%. So over the period of 5 years also you have got such a high percentage of CAGR, which usually you don't get with many technical analysis or fundamental analysis or different knowledge of stock investment. So that is why this strategy is very simple to learn. This is mainly for the beginner. You can start your trading journey without thinking much about whether you are having this fundamental business knowledge or not, whether you are having this finance or accounting knowledge or not. With this simple strategy, you have to just take this 30-35 stocks, make the watch list, and just implement these steps to make the consistent gain. The only thing is this strategy is about investment, not the trading again. So I talked about, suppose you have to sell your stock in between. So suppose currently you have invested here during the pandemic time, 16 March 2020. So whenever the stock price is going to touch its all-time high level, then only you are going to sell a stock. Then only you will be making the profit out of that stock. That is very, very important. So this is one of the critical steps. So now let's see other stock also. How much other stock has given the profit over the year. So I have taken the range from that 10 years period to see the total percentage gain, but you can make the Excel sheet also. I will share a link of that Excel sheet also. You can put different investment and you can check as on that how much investment you have made and how much profit you have made to calculate the CAGR. So for CAGR calculation, I will share one Excel sheet link also through which you can test this strategy on different stock. So with PIDILITE, if we take from January 2012, see, so the PIDILITE has become, it has given 1887% of gain, that it has made our money 20 times in 10 years period of time. So you can see this strategy is so powerful, which can give you consistent gain of more than 20 to 25% over the period. Now let's take another example from ASIANPAINT. So from January 2012 till date, it has given 1125% of gain. Means 12 times our money it has multiplied over the period of time, and it has the same capability to multiply our money for next 10-20 years, because these are the market leaders which are consistently working with a return on capital employed more than 30% over the year, and they are debt-free company. So that is why we need to implement this strategy only on the fundamental great companies. You no need to pick any stock and start implementing this 200-day moving average. Then that is not going to work. You have to just take this 25, 30 or 35 number of stock, and you have to consistently invest in those stock whenever the opportunity is available. Now let's take another example. HDFC Bank. See how much? 527% of gain. So now the next one is HILDUNILVR. Let's see. We are just taking few of the examples from every sector, so that you will get the idea that in our identified stocks of list, we have identified such a great company where we will be getting consistent gain. So in HILDUNILVR also, it is close to 500% gain. Now next is BAJAJFINSV from financial sector. Now in BAJAJFINSV, from January 2012 till date, it has made our money 36 times. So see the power of compounding here, and see how a simple strategy can give you consistent gain over the period of time. The last one I have taken for the just to show you the example of this strategy is Havells. So with Havells, we have got again 1200% of gain. So this strategy is again means very simple to learn. As a beginner, we can start investing our journey. I also started my investing journey with this simple strategy, and it has given me such a fruitful CAGR gain over the period of 5-6 years. Of course, we have different strategy, but for investment, this is such a simple investment strategy which everyone can follow and make the consistent gain and build the fortune over a period of time. So I hope you have liked this video. If you have liked this video, please hit the like button, because then only it will reach to maximum and add value in their life also. And if you are new at this channel, please hit the subscribe button also. So thank you. I will see you in next video.